Breaking news tonight. A stunning blow to U.S. leadership as China flatly rejects Donald Trump's demands, igniting fears of a $120 billion collapse across G7 economies and raising fresh questions about the future of the U.S.-led global order. With BRICS nations openly celebrating the move, analysts warn this could mark the most dramatic power shift in international economics since the 2008 financial crisis. The story began when former President Donald Trump, speaking at a high-profile economic summit in New York, demanded that China halt its de-dollarization campaign, stop energy trade with Russia, and resume purchases of American tech and agricultural products. Trump warned that any country undermining the U.S. dollar undermines global stability, and hinted at sanctions if Beijing did not comply. But just 48 hours later, China delivered a resounding no. At a packed press conference in Beijing, Chinese Foreign Ministry spokesperson Zhao Lijian declared, "China will never bow to threats or coercion. Our economic policies will be determined by our interests, not by demands from Washington." He went on to say that BRICS nations, including Brazil, Russia, India, China, and South Africa, fully support the transition to a multipolar financial world no longer dominated by the U.S. dollar. The rejection sent shockwaves through global markets. Within hours, the U.S. dollar index fell 2%, its sharpest single-day drop in over a year, while gold prices surged as nervous investors fled to safe haven assets. European banking stocks tumbled as analysts warned that G7 economies, already struggling with sluggish growth and high debt levels, could face a $120 billion hit if BRICS nations accelerate plans to trade in local currencies instead of dollars. Trump, known for his fiery rhetoric, lashed out on social media, accusing China of economic sabotage and warning that there will be consequences. But behind closed doors, reports suggest even Washington's closest allies were rattled. Germany and France, both heavily dependent on exports to China, expressed concerns about being dragged into a currency confrontation that could destabilize global trade. Meanwhile, BRICS leaders celebrated the move as a historic turning point. Russia's foreign minister called it the end of Western economic dictatorship, while Brazil's finance chief declared, "The world is no longer unipolar. The era of one currency, one superpower, and one set of rules is over." Social media erupted across Asia, Africa, and Latin America with hashtags like hashtag BRICS versus G7 and hashtag dollar down trending globally. In India, commentators noted that BRICS nations now represent over 40% of the world's population and nearly 32% of global GDP, giving them unprecedented leverage to challenge Western financial institutions. Economic think tanks in London and Singapore warned this confrontation could accelerate the rise of alternative financial systems outside U.S. control, including BRICS-backed payment networks and new trade agreements bypassing the dollar altogether. By evening, Wall Street executives were calling for emergency consultations with the White House as the prospect of a global currency realignment sent jitters through bond and equity markets. Oil exporters like Saudi Arabia and the UAE, already exploring yuan-based oil trade with China, hinted they might side with BRICS if the standoff escalates. As one senior European diplomat told Reuters, "This is not just about trade or tariffs. This is about the global balance of power shifting before our eyes, and the West does not have a clear strategy to stop it." The political drama in Washington intensified within hours of China's rejection. Lawmakers from both parties demanded swift action, accusing Beijing of trying to undermine U.S. global leadership and destabilize the world economy. Republican Senator Mark Collins thundered on the Senate floor, "This is a direct assault on the United States and our allies. China is weaponizing its economic power, and if we don't respond now, the entire free world will pay the price." Democrats, while less fiery, admitted the situation was spiraling. Senator Emily Carter warned that Trump's aggressive demands had backfired, pushing China and BRICS nations closer together while isolating Washington diplomatically. "We need smart strategy, not economic ultimatums," she said. Inside the White House, officials held emergency meetings with Treasury Secretary Janet Yellen and Federal Reserve Chair Jerome Powell to stabilize financial markets. Sources told Bloomberg the administration was considering tariffs on Chinese goods, tighter export controls on advanced technology, and sanctions on BRICS financial institutions as possible retaliation. But Wall Street executives urged caution. JP Morgan analysts warned that a full-blown currency and trade war could wipe out trillions in global stock market value, trigger recession fears in Europe, and drive oil prices above $120 per barrel. Meanwhile, G7 leaders scrambled to craft a unified response. Germany and France, both heavily reliant on trade with China, expressed concerns that harsh U.S. measures could damage their own economies. Japan and Canada called for diplomacy, fearing a split between the G7 and BRICS could trigger a new Cold War-style economic divide. BRICS capitals, however, erupted in celebration. Moscow's state media declared, "The dollar era is ending," while Brazilian President Luiz Inácio Lula da Silva hailed the move as a step toward financial independence. For the Global South, South Africa's foreign minister told reporters that BRICS was already exploring new trade systems using local currencies, bypassing Western banks entirely. Global markets reflected the chaos. The US dollar index continued to slide, gold hit a 14-month high, and cryptocurrencies like Bitcoin surged as investors sought safe haven assets outside traditional finance. Tech stocks fell sharply, with Apple, Tesla, and Microsoft losing billions in market value amid fears of worsening US-China relations. Even American farmers voiced alarm. China is the largest buyer of US soybeans, corn, and pork, and retaliation could hit rural economies already struggling with falling exports. As one European economist told the Financial Times, the world is witnessing the slow unraveling of the US-dominated financial order. If BRICS nations keep rejecting Western pressure, the dollar's global dominance may not survive the decade. As global markets trembled and political leaders traded accusations, analysts warned this confrontation could mark the beginning of the end for US financial dominance. The rejection of Trump's demands by China and the united front shown by BRICS nations has set in motion a chain reaction that could reshape the world economy for decades to come. The most immediate risk is the dollar's role as the world's reserve currency. For over 70 years, nearly every major international transaction, from oil purchases to commodity contracts, has relied on the greenback. That dominance gave Washington unmatched power to finance deficits cheaply, impose crushing sanctions, and maintain control over global trade networks. But BRICS leaders are now openly discussing plans for a new global payment system and even a shared currency backed by gold and critical commodities. If such a system gains traction, it would allow countries to trade outside US-controlled institutions like SWIFT, eroding America's leverage over allies and adversaries alike. Economists warn the consequences could be severe. Higher interest rates in the US as global demand for treasury bonds declines. Rising inflation if the dollar weakens in commodity markets. Geopolitical realignments as countries gravitate toward BRICS-led trade blocs. Energy markets are already flashing warning signs. Saudi Arabia, the UAE, and even Nigeria have expressed interest in accepting yuan or local currencies for oil exports. If the so-called petrodollar system unravels, Washington would lose one of its most powerful economic weapons: the ability to control global energy pricing through dollar-denominated trade. Meanwhile, China and Russia are moving quickly to institutionalize alternatives. Beijing has accelerated the rollout of its digital yuan while Moscow pushes for cross-border payment systems that bypass Western banks. India and Brazil are exploring similar platforms, giving developing nations options outside US financial networks for the first time in modern history. Global investors are responding with quiet alarm. Central banks across Asia, the Middle East, and Africa are buying gold at record levels, while hedge funds diversify into commodities, cryptocurrencies, and Asian currencies as hedges against a declining dollar. Even longtime US allies in Europe worry about the fallout. EU leaders privately fear being forced to choose between Washington and lucrative trade with BRICS nations if tensions escalate further. Some European analysts now speak of a multi-currency world emerging by the 2030s, one where the dollar, euro, and yuan compete for global influence. Yet the greatest uncertainty lies in Washington's response. Will the US double down with sanctions and tariffs, risking an economic Cold War? Or will it seek diplomatic compromises to protect its financial system from further erosion? As one veteran diplomat told Reuters, empires rarely see the moment their dominance begins to slip. History remembers the day after, and tonight, as BRICS celebrates and the dollar slides, the world asks, is this the dawn of a new financial era and the twilight of American power?